Hello everyone, welcome to Chartered Forex channel. In this video, I want to talk about the circular flow of income. The circular flow of income or circular flow is a model of the economy in which the major exchanges are represented as a flow of money, goods, and services between economic agents. The flow of money and goods exchange in a closed circle correspond in value but run in the opposite direction. The circular flow analysis is the basis of national accounts and hence of macroeconomics. This graph shows the circular flow of income in a five-sector economy. Sector 1, 2, 3, 4, and 5. Now we see how money moves within an economy. The household sector provides resources for market by factor of product. And this market provides resources for firms. Firms payment to factor and factor payment for household. This payment is national income. The household use national income for three parts: consumption, tax, and private saving. Tax for government and private saving in the financial market. Also among the national income used for import. Import for overseas sector. Firms provide goods and services for market. And market give firms revenue. National income or NI minus tax for government equal disposable income or DI. Disposable income or DI is spent for consumption, investment, and import. Revenue is GNP or gross national product minus CCA or capital consumption allowance is net national product. Balance of trade or in X is an important term in the macro economy. And this is equal export minus import or X minus M. This can be positive or negative. When it's positive, export is higher than import. Upside down, when it's negative, import is higher than export. Equilibrium condition in economy is Y is equal YT, S for supply and G for demand. Supply equals C plus G plus I plus balance of trade, or X minus M. C for consumption, G for government spending, I for investment, X for export, and for import. When we have supply equal demand, the economy is balanced. When supply higher than demand, we have a recession. And when supply lower than demand, we have inflammation economy. I said when supply higher than demand, we have a recession in economy. In this situation, the product is low, the price is decreasing, and interest rate is low. In this condition, it's good to save money in the bank. But when we have inflation, means supply lower than demand, the price is increasing, the demand is increasing, and this situation, saving money in the bank is not good, as it is important in this situation. The recession condition, the price of house, gold, and car are fixed, so in this situation we just saving money. And when we have inflation, it's good to spend our money in the assets. This means in this situation we must buy and buy. I said price is increasing inflation, but what's this mean? We have a factory that produces one chocolate for one demand or one person. When demand is increasing, we have 3 people for one chocolate, so price is increasing to handle the situation. Also in recession situation, the supply is higher than demand, so price is decreasing. Suppose the recession situation such an egg. When it's break, unemployment is bad. Thanks for watching my video. Please don't forget to subscribe me.